Hello, everyone, and welcome. My name is Sarah Lowther, and welcome to this Master Investor webinar. Over the next hour, we're going to get a thoughtful overview of the EV and tech economy, and we'll hear from two companies involved in its evolution. One of the questions is, without narrowing the debate too much, is it all about the battery? Well, the format is presentations followed by Q&A from you, the audience. So please do put any questions in the Q&A section on this platform. This webinar is being recorded, so you'll be able to watch at your leisure on demand. I anticipate that this webinar will last about an hour. So first up, the scene setter. I'm delighted to be joined by Alistair Ford, who is a writer for Master Investor, Vox Markets. He was the editor at Mindsight, spent many years at the Investor Chronicle, and has experience at the coalface as non-executive director of Great Western Mining Corporation and Extract Resources. I'm glad you found the time to join us, Alistair. So, Alistair, the EV revolution, is it a revolution? And is it stalling due to the lack of raw materials required to fuel it?
I think it is a revolution, Sarah. Yeah, hi, glad to be with you. I think it's what you might call a slight slow burn of a revolution, in the sense that some of these revolutions take a little while for the full effects to become clear. And as to quote an hackneyed phrase from long ago, somebody asked a senior Chinese politician when the effects of the French Revolution would be known, and he said not yet, or words to those effects. And I think we're kind of in that position with electric vehicles a little bit. I mean, you asked about a rhetorical question just now: is it all about the battery? And I think the answer to that question is it probably is all about the battery in general, although electric vehicles themselves are different technologies from the general motor car. So there'll be certain differences overall in the way these vehicles are constructed and the commodities they use outside of the battery too. So it's largely about the battery. The battery gets all the press and all the hype, but there are other commodities and other parts of the vehicle that we should be paying attention to as well.
Okay, so let's go through the periodic table. What are the commodities that are required now and in the future to sustain the EV economy in this revolution?
Yeah, I thought you were going to ask me that. So I made a list to make sure I didn't miss any out. So I'll just read out the list from top to bottom. This comes from a famous presentation put together by MIT some years ago. And it's also cited in one of the presentations of one of the companies, which we're going to hear from in a minute as well. So it may be that I'm sort of presaging something they say. But the commodities in question are tin, lithium, cobalt, silver, nickel, gold, tungsten, vanadium, graphite, niobium, zinc, platinum and palladium. And MIT also lists salt in their presentation. I'm not sure how relevant salt is to this particular conversation, but I would also add copper, not particularly for the use in the batteries themselves, but the amount of wiring that comes off the battery and goes all around the car is very significant. So actually copper is a metal that we need to be very aware of when we think about the future growth of the electric vehicle market and the commodities that are needed to meet that growth.
So hopefully this will present lots of trading opportunities. So therefore, where are these resources, all of them, including the salt, if you know, and who is extracting them?
Well, it's as you know, the mining industry is a global industry, and these resources are scattered all around the world. But there are certain specific hotspots. For example, lithium, the second metal that MIT, or the second element that MIT highlight, that's found in South America predominantly and Australia by and large. But there is there is significant lithium to be found elsewhere in the world. Tin, a lot of that also in Africa, cobalt in Africa, silver generally around the world, a lot of nickel. Nickel is distributed quite widely too. And so we go down to this. Copper is, there's a lot of copper in Africa, a lot of copper in South America, and quite a lot in Australia too. So we're talking about the familiar mining destinations in the world, the established jurisdictions, with a few unusual exceptions. I mean, we know there's some lithium in Europe, for example, and these days there's not too much mining that happens in Europe, but there is some interest in lithium in particular because the governments in Europe are beginning to regard the electric vehicle market as something strategic. So they're much more minded to grant permission for mining lithium than they would be, for example, coal. Whereas in China, they're coal all the way. So there's quite a lot of disparity in the enthusiasm for the mining of these commodities. And as we're going to hear from CleanTech Lithium shortly, it's interesting to note that Chile, one of the major destinations for lithium, generally makes it relatively easy for miners to go down there and get things done. So it's quite a sort of familiar picture, but with a new battery-related twist.
Okay, so in your opinion, and I'm very lucky within my profession, I'm able to speak to a lot of the listed exploration companies. But within your opinion, any standout listed companies in terms of their pioneering extraction methods that are in production or have the potential to provide decent shareholder returns?
Well, I mean, that's sort of couple of questions in one there. I mean, the companies that are established in the lithium mining space, in particular, are SQM. They're quite large, but in the more junior end, I think Atlantic Lithium's quite interesting, and I would say that most of the lithium companies around have been under pressure share price wise because the lithium price itself hasn't been performing as it has done in recent years. I think what we saw is a massive burst of enthusiasm about a decade or so ago, and lithium became the commodity of the moment, and a lot of money went into lithium companies, and some of them have delivered, but some of them have taken a while to get going, and so shareholders have lost a little bit of patience and put money elsewhere. So actually, a lot of lithium companies across the board are, quite seriously discounted, and I think there's general value on offer in the sector as a whole, allowing that you probably have to take quite a long view. As I said, this revolution is taking place over years and possibly decades rather than over a matter of months. So I think if we're going to be in the battery space with specific companies, it is necessary for investors to understand that they need to take quite a long view and that these commodities will come back, and the share prices of these companies will come back, but it may not be overnight and probably won't be before Christmas at the very least.
Okay, so in terms of that long view argument that you've brought up there, what's required to support company endeavours? Are you sensing that most major economies are on board, supportive and financially generous, or are we still reliant on cornerstone investors?
Yeah, it's a mixed picture, really. I think there's there's a few things to consider here. First of all, the electric vehicle take-up rates have been a bit sort of stop-start. I mean, they're really good overall. If you look at the numbers, I took a note here. I think there's 14 million electric vehicles were sold in 2023, and new cars now represent 16.8% of electric vehicles sold. So, that's a strong statistic, and the growth over previous years is very significant. But as we know, there's been quite a lot of press about a slowdown in the electric vehicle market. And I think part of that is because quite a lot of the easy pickings have been taken now. And, as many of the viewers here will know, and many people around the world know, that it's all very well having an electric vehicle if you've got your own drive and you can just plug it in. But if you live in a city and you can't actually park outside your own house, or if you live in a block of flats, and your flat is like, 25 meters above your car, the opportunities to charge it are few and far between. So I think what we need to see is, more infrastructure and easier infrastructure. And that goes back to part of your question in terms of the government, and the government structures that are in place around the world. So there is, I think, a gradual waking up of governments that they need to make an effort to get the infrastructure in place for the next burst of electric vehicle enthusiasm to proceed. And there are incentives in different parts of the world. They come and go. But the government, for example, in the UK, is helping mining companies with their lithium projects, and it's helping sort of ad hoc the electric vehicle infrastructure. But it's a slow process, as you know. Planning regulations are a maze in the UK, and making electric vehicles sort of a meaningful part of those planning regulations is an uphill task. And the other thing I'd just say quickly is that in terms of electric vehicle growth and the opportunities for investors, the raw materials required, the availability of the raw materials isn't particularly problematic. The supply-demand picture is the real thing, but the actual abundance of the raw materials in the earth it isn't really problematic. There's a reasonable amount of lithium. There's a reasonable amount of cobalt if you're prepared to go to some tricky jurisdictions. There's quite a lot of nickel, and you can find these other commodities if you're really minded to. But the question is, how much of them are being mined at any given time? And when the price goes down, there's less of an incentive for the miners to mine them, which means that at some point there'll be a supply constraint because less of that product will be produced. And we see this all the time in mining across all sectors, all commodities. And I think we're reaching that point now where there's been a significant reduction in the price of lithium. The price of copper is under pressure. The price of various metals is not where it used to be, and that means that the amount of supply is eventually going to drop, and that in turn will be when investors should look for the opportunities to come in, because the supply constraints will then all of a sudden start putting upward pressure on the prices of these commodities, and the mining companies that mine them will start to look like very good value.
I'm smiling. I'm reading a question here from Mark, and I'm not sure if it's a rallying cry or not. He says, although I hold lithium stocks, I really don't fancy sitting on lithium. Non-flammable non-flammable batteries are on the way. Let's hear a bit more about that, he says.
I mean, there are all sorts of different types of battery technology. I was reading about the recent news today. You may have seen it, that Amazon are using or are going to use small-scale nuclear reactors in their vehicles. So I don't know if you're questioning would rather sit on a small-scale nuclear reactor or a lithium battery, but I mean, there are different types of battery. The hydrogen battery is another way forward in this market. That technology is moving forward quite quickly. And of course, in terms of the lithium batteries themselves, there are different types of lithium battery that require slightly different chemical and metallic compositions. So I also would say that petrol engines, you don't want to get a petrol engine catching fire either. So there's drawbacks and pros and cons for all types of vehicle powering systems, I would say.
So finally, Alistair, the consumer at the bottom of the chain, but without their buy-in and adoption, then the EV economy may take some time. You've already encouraged investors to take the long view. How do we encourage the consumer to adopt and adapt?
Well, I mean, try it out, I suppose, is one thing. I was driving an electric vehicle today, and it's actually, depending on what you choose, it can be quite fun. We've got, where I live, we've got electric buses. They drive around clanging a bell because they're so quiet. They actually have to make an artificial noise so that they don't take people by surprise and run them over. So, I mean, there are some advantages to electric vehicles, which is that, the lack of pollution, but also the lack of noise. So I think we can perhaps talk up the fact that we're going to have a quieter and more peaceful world the more we take to electric vehicles. And I suppose the other thing is that, although I've not had personal experience of it, I've heard that Teslas can be very fast and accelerate very quickly. So if you're of a sporty mind and you like your fast cars, That doesn't rule out electric vehicles at all by any means. Some Teslas can take on supercars and perform very well against them. So, the electric vehicles that we have available to us already come in all shapes and sizes. The electric vehicle I was driving today was actually a three-wheeler, a bit like the old Del Boy vans, which we used to see in the 1970s. But then, as we saw in the press a couple of weeks ago, or a week or two ago, Elon Musk has just brought out electric buses. So, and he also has electric lorries. So there's the range is vast. Try what you like and give it a go.
But was that three-wheeler yellow, Alistair?
No, it wasn't, I'm afraid. It was actually bright orange, so even more garish.
Grim.
Yeah.
Alistair Ford, absolute pleasure. Thank you very much indeed for that scene setter. Really appreciate it. Thank you.
Good to join you, Sarah. Thank you.
Okay, to our first company of this webinar, and Alistair has already given a hat tip and a nod. It's Cornish Metals. It's dual listed on the TSX in Canada and AIM here in London, where it has a market cap of just over £39 million. It's a mineral exploration and development company focused on the South Crofty Tin project in Cornwall. And we're going to find out if tin is crucial for the energy transition. Fauzi Hanano is the Chief Development Officer. A warm welcome to you.
Thank you, Sarah. And I'm pleased to be presenting today about tin's importance in modern technology and the energy transition, as well as about our South Crofty Tin project located in Cornwall. Next slide, please. So this is our standard disclaimer. Thanks for flipping through it quickly, because I was going to do just that. So here, just very quickly before we start talking about tin, our corporate information, as Sarah mentioned, our market cap is about £40 million. Our main shareholder is Vision Blue Resources, who have a 26% stake after having made a £25 million investment in May 2022, which has really supported driving a lot of the activity that we've been doing and milestones that we've achieved at the company over the last couple of years. Next slide, please. So looking at tin, there's still quite a bit of education that's needed on tin, as it's not a very well understood commodity. It tends to be overlooked or undercovered by a lot of the commodity research providers. However, when we look at tin's properties, it's used in alloying tin plate for food packaging, amongst other traditional uses. It's usually associated with this. You think of tin, you see the image in the middle, the Heinz can. That's what people tend to associate tin with. However, you look at the pie chart on the bottom. Individually, these account for small end uses for tin. And as you can see on that chart, about half of the tin consumed currently is used for solder. And this follows a regulation imposed by the EU about 20 odd years ago, banning the use of hazardous materials in electronics. And tin was the best suited substitute for lead. And with this, we saw pretty much a doubling of tin's end-use demand, because solder was not a demand end-use at all for tin until that happened. And now you see it makes up about half of tin's overall demand. So what we know is tin connects almost all electronic and electrical infrastructure, with other uses, including in batteries and in solar panels. Next slide, please. This slide was already referred to in terms of the work that was done by MIT and Rio Tinto. And the reason why we highlight it here is because tin comes out on top in terms of being the metal most impacted by new technology. And you can see the applications, whether it be for EVs, renewables, AI. You will need tin, given that it does connect all electrical infrastructure. And that's why there's a lot of potential upside to tin's end use as we see new technology and the energy transition taking place. Next slide, please. So on this slide, it really demonstrates how technology and the energy transition will be driving tin demand. We've got here kind of a baseline in 2020 of standard demand, and then kind of splitting out three key demand end uses where we see a lot of growth coming through in the next decade: solar, EV, and 5G. we look at solar, tin's use in solar is really for what we call solar ribbon. It's a copper wire with a tin solder coating that connects the solar cells, and it's a key component of solar panels. We see that the tin use for solar panels is up more than 3 times in the last 5 years. So that is quite exceptional. And that accounts for the fact that we're seeing growing contribution of solar to the overall global electricity generation. And it's up to about 5.5% in 2023 from about 4.6% in 2022. And that growth is continuing to lead to more growth in tin demand, as you can see on the chart here, where you see this as being one of the most important growth factors for tin use within new energy transition technologies. Also, the use within EV, higher electronic intensity translates into about 2 to 3 times more tin use in electric vehicles compared to internal combustion energy vehicles. But even ignoring that, just looking at the additional electrification and technology that's being put in cars, be it active and passive safety, that alone means that there's more processing capacity, which means there's more tin and other critical metals that are required for new batteries. And also looking at, as we transition from ICE towards EVs, there's clearly a big gap there that the hybrid is taking up. And we also have start-stop technologies. This means larger battery requirements, which currently using lead acid batteries, but there is quite a bit of tin loading in these, and that means bigger batteries is more use of tin. We look at the penetration of EVs. Nearly 1 in 5 cars sold last year was electric. Market share is expected to continue to grow towards about 40% market share by the end of the decade. So that with it will bring in more tin demand, as well as other accompanying metals. And then looking at advanced electronics, the large growth in data storage, data processing, as well as in artificial intelligence, this is bolstering the use of tin. When we look at NVIDIA producing more and more graphic cards, that's more processors, which means more solder requirements, so more tin use. So it's all quite positive for end use demand for tin growth. Next slide, please. So when we're talking quite favorably about demand, we need to see the supply that is there to meet this demand. Currently, if we look at 2024 alone, I'll look at future years on the next slide. But 2024 has demonstrated that there's quite a lot of disruptions happening, and that is due to the fact that the tin is quite concentrated in the supply, mainly being produced in Asia. And over the last year, we've seen quite a lot of disruptions, both in Indonesia and in Myanmar. Myanmar, there's a mining ban that's been in place since August of last year. And in Indonesia, there's been a change in the licensing for exports. And in fact, in the first 2 months of this year, there were no exports made whatsoever. And while exports have recovered, they're still well below where they were last year. And tin and Myanmar and Indonesia are the second and third largest producers of tin. So it's quite important when you see such large disruptions happening. And that's led to 2024 being expected to be the second consecutive year of supply decline. And the International Tin Association estimates that this year we will see a deficit in the market of about 10,000 tons. And that's in the market of about 360,000 tons. So it is quite substantial. Next slide, please. On this slide, what we can see here, the price chart that's indexed to the beginning of 2023, it demonstrates that tin has been the best performing base metal over the last year and even over the last couple of years. Yet it's not the one that you'll hear the most about or the one that's being most reported on. That tends to go to copper more than anything else. But tin has been designated a critical mineral or strategic designation, whether it be in the US, UK, Canada, Australia, and other countries. Yet there is no mine tin production in North America, no primary production in all of Europe. So security of supply is quite a concern. And as I was talking about earlier about potential disruptions, looking at the concentration of supply, about 2/3 of mine supply is from Asia, mainly from China, Indonesia, and Myanmar. And about 80% of refined supply is from Asia. So that demonstrates that a lot of the the requirements for Europe and other countries are coming from Asia. There's of course some refined supply also from Peru as well that is being supplied to Europe. But it just demonstrates that out of about 45,000 tons that is consumed by Europe, only 15,000 of that is met by locally, and that's through recycling, not through primary production. That means that's over 30,000 tons that's still dependent on imports. And we've seen on the previous slide that supply disruptions are having an impact on the security. And then looking forward, not only do we expect a deficit this year, but it's expected that there's going to be an emerging growing deficit as we move forward, given the growth in demand and the fact that there's not much new tin supply that is expected to come onto the market. And that's where I'd like to start talking about our South Crofty tin project. Next slide, please. So South Crofty is located in Cornwall. It's we own it 100%. It's a historic mine. It's been operating for about 400 years. And it stopped production not because it ran out of tin, but because of pricing that had collapsed in the years prior, and that led to the closure of the mine. But since then, there have been multiple efforts to bring the mine back into production, and that's what we are doing right now. And I'll talk a little bit more about that. This mine is fully permitted. We have permits underground permits up until 2071. Being a historical mine, we do benefit from existing mine infrastructure. There's also excellent transport and power infrastructure around there. For example, when I go down to site from London, I just take the train from Paddington, get off at Camborne, and take a walk to the mine, which is not something you say when you try to visit other mining operations elsewhere in the world. And this is expected to be a low-impact underground operation with no surface waste, and it has demonstrated environmental and economic benefits. So overall, it is expected to be a high-value project, and it is a very high grade, which I'll talk about next. Next slide, please. So on this chart, this bubble chart, I show the grades on the y-axis and the measured and indicated resource on the x-axis. And what it shows, out of a large subset of all non-producing tin mines, the South Crofty mine is the highest grade in the world, and that goes a long way in terms of benefits for cost and for the production of tin. And that is quite a strategic advantage for South Crofty. Next slide. And I'd like to talk a little bit around the project economics as well. We put out a preliminary economic assessment earlier this year in May, and this proved up that this is a project that will likely have a long life, and it's going to be a modern underground mine. The economics were quite compelling. We're looking at about a $200 million after-tax NPV, 30% IRR. We expect to produce about 50,000 tons over a 14-year mine life, averaging close to about 5,000 tons per year in the first 5 years of production. That makes up about 1.5% of global mine tin production, which is quite substantial. It's also expected to be a very low-cost operation. We're looking at under $14,000 a ton over the life of mine, closer to 12,000 in the first 5 years of full production. So that would position South Crofty as being a very low-cost producer. This also support very strong earnings with an EBITDA margin north of 60% and total cash generation over just these first 14 years of over $600 million. And as I mentioned before, of course, this is fully permitted. It has strong local support, which is very important in terms of having that social license to operate. Next slide, please. Now, very quickly looking at this slide, and the reason why I have this here, on the top we see the production profile where I've highlighted the orange line, which shows the production over the first 5-6 years at that 4,500, 5,000 tons per year. And then you see that it comes off quite quickly in later years. Now, the reason for that is because this is constrained by the existing mineral resource. Now, as I said before, this mine has been operating for a very long time. It didn't close because it ran out of tin, but because of pricing. So we expect that the profile here in the first 5 years is going to be much more representative of the production profile and the cash flow generation for years to come. So you can expect that to be kind of extended to the right on this chart. And that, of course, translates into the cash flow, where we forecast about $65 million of annual average cash generation in these first 5 years. Next slide, please. And we could always rely on history to kind of provide some evidence of that. So here we have a chart for the last 24 years of production at South Crofty before it closed in 1998, showing in the gray bars the cumulative metal mined, and in the orange bars the cumulative metal added to reserve. And essentially what it's showing is that we've had a consistent history of pretty much one-for-one resource replacement over that period, and we'd expect that to carry on going forward. And just as an example, in 1974, we had less than 4 years of mine life remaining. 23 years later, in 1997, we had 4.5 years of mine life remaining. So that just demonstrates that there's this continued ability to replace resources over that time, and that we expect to continue when we get back into production. Next slide, please. And beyond that, we do see a lot of further exploration upside, both within South Crofty, where we see the orange bars, which are the lodes that are currently part of the mineral resource, but also you see multiple blue lines on this image that are other mineralized zones that add even further upsides, which we believe can be eventually added to the mineral resource. And that includes at the bottom something I've circled down there called the Wide Formation, which is a mineral structure that we explored, and we had a drilling program completed over the summer of this year, which demonstrated that despite the fact that there's been hundreds and hundreds of years of mining in the region, there's still scope to discover new mineralized structures and lodes that haven't been discovered in the past. So that keeps us quite optimistic on the future here to continue to add to the resource. Next slide, please. On this slide, I'm showing what we believe to be the potential re-rating for Cornish Metals. We've got a 40 million pound market cap, which indicates that we're trading at about 1/4 of the NPV as demonstrated on the PEA. If we look at this even longer term, we see even more potential, whether it be through exploration, optimization, and growth and M&A opportunities. But just looking at, for example, the EBITDA generation, we talked about $80 million per year. So that's about, let's say, 60-odd million pounds per year annually. If you put that on a 5x multiple, then you can see here that it's not just a 4x increase from our current market cap, but significantly more in terms of the potential when this becomes a steady state operation once it comes back into production. Next slide. And to leave some time for questions, just a very, very quick summary. As I mentioned, South Crofty is a high-grade, high-value project in a very low risk jurisdiction, and it is fully permitted. These are all very important factors that do separate this asset from other potential projects. The PEA validated the potential for this to be a long life, low cost mining operation. It's got a long history of mining, and that is quite an advantage in terms of it's very well understood in terms of the mining, processing, the recoveries, and also having existing infrastructure. So the picture you can see here, that is the head frame of the new cook's kitchen shaft. It's there right now, and that sits over a shaft that is 770 meters deep. So we don't need to sink new shafts at the operation. And we also, of course, benefit from community and government support. So tin is a critical metal. It's essential, as we mentioned, for modern life, for the energy transition, but there's limited options for tin exposure within the equity space. Cornish Metals can provide that exposure, and it presents an opportunity for domestic tin supply for the UK and within Europe and other Western countries. And with that, I'm open to questions. Thanks, Sarah.
Thank you, Fawzi. We've just got a couple of minutes now. I'm just wondering what efforts are being made to fast track the asset into production. I appreciate that there's dewatering and safe refurbishment going on, but what else are you doing to expedite it?
Well, I'd say we're doing everything we can to get this back into production as quickly as possible. Over the last week, we've made a few announcements. One, we announced that our new CEO, Don Turvey, he's joined as of last week, actually relocated from South Africa to Cornwall earlier this week. He brings a lot of experience in terms of building new and brownfield operations, a lot of underground experience. So that skill set is going to be very core in terms of leading Cornish Metals forward and to building South Crofty. We also announced that we have appointed Endeavour Financial as our financial advisor to lead the project finance process. So that's also, of course, that's going to be the most important component here in terms of getting this back into production, is really securing the funding requirement for South Crofty. So we're doing what we can to really push this forward, be it on the technical and on the funding side.
Okay, so you're getting all your ducks in a row, but project finance, when do you anticipate that this will be calculated, particularly as this asset is a moving feast, as it were?
So we'll maintain the momentum on site as we are right now with the shaft refurbishment, the dewatering. We'll look to commence some early works as well. While we're going through the process, this is project finance tends to be a long process, a lot of due diligence involved, and we'd hope to have that completed by H2 of next year.
So Robert asks, the tin price was the problem in 1998. He's referring back to South Crofty's history. I think that was the last time that South Crofty produced tin. So the tin price was a problem in 1998. What tin price assumptions have you made to calculate your NPV?
So the base tin price that we used is $31,000 per ton on a long-term basis. If we look at the tin price, it's averaged around that so far this year. It's been hovering north of 30,000, quite consistently. Currently at about $32,000-$33,000 per ton, and the expectation that we're seeing tightening market conditions currently, but also later this decade, keeps us quite optimistic that our $31,000 price forecast is probably a little bit on the conservative side.
So water sanitation and the disposal of water is a political hot potato. What happens to the water that's coming from South Crofty once it's been treated?
Well, thanks for that question. Actually, it's a good example to show what we are doing there. So historically, the mine water from South Crofty and other mines would just drain into the Red River, without being treated. We have built a water treatment plant that's been in operation since November of last year, dewatering our mine. So we're effectively replacing untreated water with what comes out of the water treatment plant is almost drinking quality water, and that's going now. That's going into the Red River. It was called the Red River for a reason, given the color from what was pouring into it. But since we started the dewatering process, for the first time, you actually see is crystal clear water coming out, and you can see the rocks at the bottom of the river. So we're having an immediate impact in cleaning the quality of the river.
Very good. And I'm afraid we're out of time. Fawzi, thank you very much indeed. And good luck with the endeavours of bringing South Crofty back online. Thank you.
Thank you very much.
Okay. Yeah, who would swim in that water? Possibly me. Okay, so as we have just learned there about tin's relationship with new technology, including autonomous and electric vehicles, advanced robotics, renewable energy, energy storage, and advanced computation, lithium is also essential for those technologies. Our next company is CleanTech Lithium, the exploration and development company advancing the next generation of sustainable lithium projects in Chile. It is dual listed, and here on AIM, it has a market cap of £18.2 million. Nick Baxter is Head of Communications and ESG. A warm welcome to you.
Thanks very much, Sarah. So thank you everyone for joining and giving me an opportunity to talk about CleanTech Lithium. As Sarah mentioned, I'm Head of Communications and ESG at CleanTech Lithium, been there for about 2 years, just under, and previously working with chemicals company Johnson Matthey and the EV manufacturer Rivian. I'm going to talk a little bit about our projects, an opportunity of direct lithium extraction, which we are developing in Chile. I know the slides will be shared afterwards, but also feel free to ask questions as we go. We are here today, obviously, because of the massive growth opportunity that is presented with electric vehicles, batteries, and electrification. And as Alistair expertly mentioned in the teaser before, lithium is a key ingredient to make that happen. Next slide, please. So we have a disclaimer with forward-facing statements that I make. So I think just taking a quick step back, I think we can all agree that lithium demand is here to stay for EVs and also energy storage systems. Despite sort of the recent oversupply and kind of the choppy waters with the lithium pricing, there's no doubt that as we see the demand increase towards the end of this decade, we're going to need more lithium production to meet net zero targets, to decarbonize and move to electromobility. We also need to do this responsibly. So I'll come on to that. With recent industry news, you would have seen Rio Tinto purchasing Arcadium for $6.5 billion US dollars. Pilbara Minerals had a deal in August with Latin Resources, and also yesterday's announcement with General Motors entering into a joint venture with Lithium Americas really shows sort of an optimistic sort of long view. Again, as Alistair said, sort of the long view demand of that lithium market returning. Next slide. So who is CleanTech Lithium? In case you don't know, so we are pioneering direct lithium extraction. We are an exploration and development company based in Chile. We have projects in the lithium triangle from scoping studies we've done showing robust economics and being at the low end of the cost curve, which is I'll come on to, which is obviously important as the lithium price begins to stabilize. We have a pilot plant up and running, which is producing good results. And we also have excellent community relations and stakeholder partnerships. This is due to an early stage engagement. We've signed a partnership with the local indigenous communities where they will support us on the environmental impact assessment and also the relationship we have with the government. The Chilean government has recently given a clear line of sight for the operating contracts, giving that some more stability. And also the CleanTech Lithium is led by a proven board that have delivered large scale projects from exploration to production. Next slide, please. So here's the board. I'm just going to highlight quickly Steve Kessler, our executive chairman. He's the former CEO of Kawasaki, which is the largest copper mine in the world. He's also held senior roles at Rio Tinto and Billiton, now BHP. Maha, she headed up the copper desk at Trafigura. She has vast experience in dealing with offtake agreements as we start to enter strategic partner conversations. And Tommy is our non-exec in Australia. He's been hitting the ground over there to build our reputation ahead of the proposed listing on the ASX. And next slide, please. And here's just a brief kind of company summary. So Sarah mentioned we are also AIM listed. We IPO'd in March. Regal Funds is our main significant and supportive shareholder, and they remain so as the dual listing of the ASX continues. As Alistair mentioned, with the share price, we have been impacted by that price, as with our lithium peers. But I think with recent industry news, there is optimism for that long-term view, and ultimately the fundamentals of our projects remain, and I will talk those through now. Next slide, please. So with our projects, we have a few projects, but our main sort of flagship project is Laguna Verde, which is at pre-feasibility stage, as you can see here in the picture, with 2 scoping studies that we have published last year. We've got a combined JORC compliant resource of about 2.7 million tons. Laguna Verde is really the flagship asset at the moment, and this is where our focus lies. Next slide, please. So we've completed 8 wells to date, and we're expecting further drilling results shortly, which will convert resource estimate to the maiden reserves report. From the scoping study, it represents a 30-year project of 20,000 tons per year. That's equivalent to kind of 300,000 to 500,000 electric vehicles, depending on the weight of the batteries and the demand for lithium in each one. As mentioned, the PFS is underway, and this is led by Worley, which is an internationally recognized engineering firm. The PFS will provide the kind of initial economic and technical detail that's required in order to further those conversations with car manufacturers, battery manufacturers looking to secure supply of lithium. Also, at Laguna Verde, we have good infrastructure. You can see there that there's there's the highway which goes towards the Argentinian border. In terms of communities nearby, the nearest settlements are about 100 kilometers away. The area of Laguna Verde is still used for livestock and passing through. So in order for us to make sure that our project is developed in the right way, we respect that territory, and also we are working closely with the communities to ensure project development satisfies all stakeholders, including the communities. Next slide, please. Viento Andino is kind of just behind Laguna Verde in terms of its development. We've completed a number of wells and have a scoping study which is showing a 12-year project for 20,000 tons. More work is required here, and we are also expecting to hear from the government over the next next quarter about whether this will be a prioritized salar for development, which is what we've heard announced recently with Laguna Verde. Next slide. And then two extra projects. We've got the exploration upsides. I think main thing to draw from this slide is that we have licenses in the region of Salar Atacama, and for those who don't know, Salar Atacama in the mountains where SQM and Albemarle operate is where the vast majority of the lithium from Chile goes into the global market. So to have licenses in this area could potentially in the future be incredibly valuable for the company. Next slide, please. I'm now going to turn to direct lithium extraction and the opportunity that we have with this technology. So, it's in the name. It's a more sort of efficient way of extracting lithium. Can be seen as with faster setup and production timelines. The process itself has been used in other industries, in uranium, in food manufacturing. It's being applied to lithium now because of that the expected and forecasted demand. And what it enables is that lower grade salars. So traditionally in South America, they use evaporation ponds, and what direct lithium extraction enables is lower grade salars, which don't have as higher concentrations of lithium, able to process that lithium and to make those projects more commercially viable. Rio Tinto's investment into Arcadium is a signpost to the long-term optimism of DLE. The CEO came out and publicly endorsed the technology. So how does it work? Next slide, please. So DLE, I suppose, is a kind of a broad term for multiple approaches to processing lithium. What CleanTech Lithium is advancing is absorption based DLE. The process is where brine is extracted from the underground and goes through a filtration process. There is a resin and an absorbent that selects lithium molecules, rejecting other impurities that exist in the brine, and then you can go through the further processing stage. Brine without the lithium, once you've processed it and filtered it, is then re-injected back underground, which means there's minimal brine depletion from the aquifer and water baseline levels. The extraction of the lithium can be done in a matter of days compared to months or years with, say, conventional methods of mining, such as with evaporation ponds. DLE also offers further environmental and social benefits. So looking at sort of lower emissions, limited associated waste, and significantly has a much smaller operational footprint, which is, of course, integral as you start to construct and build these projects. Next slide, please. So here we have our pilot plant in Copiapó. It's been up and running sort of beginning of this year. It has the capacity to produce up to 1 ton per month of lithium carbonate. The blue columns that you see here, they are loaded with the resin, and the brine from Laguna Verde is passed through this resin. Once the lithium molecules in the brine have been selected and it's been washed off, what we end up with is a concentrated eluate solution. This eluate is then further processed with reverse and forward osmosis, which is standard kind of water cleaning processes, in order to produce battery grade lithium carbonate. We have downstream partners with Conductive Energy who have recently done some work on 200 liters of our Laguna Verde brine, which I'll touch on. But what we end up with is samples of battery grade lithium, which will then be passed to strategic partners for qualification and testing. Also to note, this is in Copiapó, where we have access to skilled workforce, Chile being a mining jurisdiction. We've also been able to host stakeholders, universities, local government, as well as starting to host strategic partners to show how the process works firsthand. Next slide, please. So just looking at the results that we're getting, really we are on a sort of path of optimization. We have produced, battery grade lithium with 99.75% purity, which is enough to go into a battery. And now the key point here is then scaling that. The process work done by Conductive Energy on Laguna Verde's brine is really, it's been successful, and now we need to apply that to larger batches. So we've got 88 meters cubed of concentrated eluate has been shipped to the US, where Conductive Energy are based. And then we'll be shortly receiving larger samples, which we will then be sending to strategic partners. In terms of the rejection of major impurities, what we're seeing is that a vast majority are being rejected, and the resin that we're using is performing well. There is a bit more boron appearing in the eluate, and in order to get rid of that, it just requires further processing. And to the next slide, please. I think also just wanted to touch on really where we are. So, Chile, sort of Alistair mentioned before, it is the largest producer of copper in the world. It is the second largest lithium producer in the world, and I'm sure that that's a position that the country wants to maintain. So we want to be able to access this sort of power, this infrastructure, and also be a part of this production for the country. Chile's national grid also has increasing levels of renewable energy. I think it's about over 50%, if not more, today, and we're looking to tap into this. This, combined with direct lithium extraction, empowering our projects with renewable energy, positions ourselves what we call producing, a premium or green lithium. It gives us a sustainable advantage over other producers, and we believe this is going to be important because governments and industry alike are looking to clean up their supply chain, for the intended use of EVs and also energy storage. So it is important to note here is also with absorption DLE, it does require water to wash off the lithium molecules from the resin, but the amount lost is significantly reduced. We are committed to reducing and recycling the water. We're working with Forward Water Technologies in order to conduct further studies, which are currently underway, to make sure we limit the amount of water that we use. Next slide, please. And then just in terms of funding the projects, I think the priority is really delivering a robust PFS that will have the economic and technical detail that will enable us to have substantive conversations with strategic partners. We are at this stage non-revenue generating, so therefore we need to be flexible in terms of where do we find funding, the strategic partner being a key part of that, but we're looking at various options. Lithium market, as we know, is very dynamic, so we remain nimble to the opportunity. Also with Chile, has a free trade agreement with the US, and the EU also has import credit facilities for battery materials. This is important in terms of coming back to that sort of long-term view of lithium demand, and who are our customers in years to come. This will be a huge benefit. Next slide, please. And just from the Chilean government, I think it's important to note. Recently, we've heard from them where they've prioritized 6 salt flats. So in Chile, you have Salar de Atacama and Salar de Maricunga, which is where majority of the lithium production takes place. But the Chilean government have opened up additional salars for public-private development, and as part of that, there's a requirement to have a special lithium operating contract or sale. What that enables is for a company to commercially sell lithium. And out of the 6 salars that they've prioritized recently, Laguna Verde, our flagship project, is one of those salars. The government have set out criteria for companies to apply. You have to hold a certain amount of licenses. You have to show that you are financially stable and you've been able to invest and develop the project. We believe that we're in sort of pole position for this sale. We will be putting in our application before the end of the year. And we are expecting another announcement from the government soon about additional salars. So really, the government have been, they've offered a real kind of clear line of sight in terms of the next stage of that process.
Nick, you're overrunning, so if you could start to wrap, please.
Okay. And next slide, please. And just to quickly wrap up, as part of that sale process, the government will be looking at Indigenous community consultations, and this is something we pride ourselves on. From day one, we've had an early engagement strategy with them. They've signed an agreement with them. Recently, we had the leader of the Indigenous communities publicly endorse CTL in terms of the way that we're doing things. So just lastly, if we turn to the last slide, we'll just focus on kind of what we have coming up next for investors who might potentially be interested. As mentioned, the PFS is underway. This is a critical piece of work. We're looking to deliver this towards the end of the year. Scaling the battery-grade lithium from our pilot plant, the resource update. We're targeting the ASX listing. We want to be dual listed by the end of this year. The reason for that opens a new pool of investors. 30% or so of existing investors from CleanTech Lithium have Australian connections, and most of our peers are there, as well as applying for our sale, the operating contract. We'll expect to get an answer from that towards the first half of next year. And with that, I can hand back to Sarah.
Many thanks, Nick. Yeah, because right at the beginning, you said that there was the possibility of an ASX listing, and I was wondering if that listing was dependent on the completion of the PFS, and you're actually saying to Worley, hurry up, we've set ourselves a target for, 2 months' time.
Yeah, so the PFS is underway, and ultimately the ASX listing, a large part of that was to raise funds in order to pursue those critical path items. That was due to happen in around Q3 of this year, and there's been a delay to that process. We're still committed for that ASX listing to happen. In the meantime, we've had to do an interim raise on AIM, and that enables us to really look at how we can continue that momentum. With the PFS, we are currently speaking to Worley. Steve's in Chile right now, in terms of how can we make that possible. And again, always looking at other opportunities in the background about funding these projects in order to maintain that momentum.
You must be pretty confident that the ASX listing will go ahead. Are you able to tell us if there are any Australian funds, any institutions over there who would express an interest in becoming shareholders?
So our significant shareholder, Regal Funds, is based in Australia, and that's largely part of the reason why we're looking to list in the ASX. Steve, Tommy, they've been in Australia a couple of times in order to be able to build the company's profile. We're seeing media reports as well. So we've garnered interest. There's interest in our story, especially as sort of industry looks at the cost curve and looking at hard rock mining and operations closing down, direct lithium extraction offers an opportunity for those investors to be involved in the lithium space.
So finally, the new chief executive, what will it take? I understand that you're in contractual discussions. Are you almost there?
Yeah, I think we're almost there. I think obviously with the ASX listing is a crucial part of that. I think as we continue with that process, we're also engaging with strategic partners. So it's a very exciting time for the company. I think the process is underway. Yeah, I think wait to hear more.
Very good. You've set out your stall, an awful lot to be achieved in the next 10 weeks or so. Nick, I really appreciate your participation in what's been a really wonderful webinar. Thank you. And I want to also thank Fauzi, Alistair, and everyone who submitted questions. And of course, the team at Master Investor. We have another webinar for your diaries. It's another lunchtime. It's Thursday, the 14th of November, and the topic will be investing in the age of longevity. Many thanks for joining us again. I really enjoyed this, and I hope you have too. Take care. Bye-bye.